So today we'll talk a little bit about the media manipulation. We'll talk about Tesla's earnings, and we'll talk about what Gene Munster said about Tesla. And it's awesome. I love Jim Munster. He's one of my favorite analysts. So stay tuned. So we'll talk about Tesla's earnings, the manipulation, Gene Munster. So welcome to my channel where I give you the latest Tesla news.
Thank you very much. We have the numbers for Tesla, and the reason you're seeing a little bit of pressure right now is that this is a miss in the bottom line. The company earning 52 cents a share adjusted. The street was expecting 62 cents a share. Revenue coming in better than expected at $25.5 billion. The estimate on the street was $24.77 billion. We're going through right now in terms of what the company is saying for the outlook, if you will. The only thing they're saying is language that we have heard before, that for 2024, the volumes may be notably lower than what the company has established as its growth rate. And we've heard this before from the company. So the question becomes, they delivered 1.8 million vehicles last year. The estimate going into this report was 1.82 million, which would mean a big second half of the year. If they're not going to hit that, they're not giving us a number at this point, but clearly, that's some of the pressure that you're seeing on shares of Tesla.
Tesla investors knew it is not going to be very exciting. There was a slowdown in EV sales. Plus, Tesla focused on a ton of new projects, including artificial intelligence. So, Elon Musk warned us a while back that Tesla will sacrifice margins for a short period of time to be able to develop new products and to grow. But the mainstream media seems to have forgotten this. The following is a quick overview of Tesla's Q2 2024 results. Revenue. Guess what? In the second quarter, Tesla posted a total revenue of $25.5 billion, with automotive revenue at $19.878 billion. FactSet consensus pointed to Tesla posting revenue of $24.5 billion in Q2 2024, while Sachs estimated Tesla to report $25.13 billion in revenue, so Tesla did better. Overall, Tesla total revenue increased 2% year over year, thanks in part to factors such as growth in the company's energy generation and storage business, Cybertruck deliveries, and higher regulatory credit revenue, among others. Earnings per share. Tesla's non-GAAP earnings per share for the second quarter of 2024 was listed at 52 cents, while GAAP EPS for Q2 was listed at 42 cents in comparison. FactSet consensus suggested that Tesla would see earnings per share of 61 cents, and Sachs expected quarterly earnings of 62 cents per share, and so Tesla missed. Profitability. Tesla posted $1.6 billion GAAP operation income in Q2 after restructuring and other charges of $600 million. The electric vehicle maker saw $1.5 billion in GAAP net income and $1.8 billion non-GAAP income in Q2 2024. Tesla noted that operating income decreased year over year to $1.6 billion in Q2, resulting in a 6.3% operating margin. This was due in part to reduced models S3, X, and Y vehicles, ASP, restructuring charges, and an increase of operating expenses, largely driven by AI projects, to name a few. Cash. Tesla's quarter and cash equivalents, and investments in the second quarter was $30.7 billion. The company noted that the sequential increase of $3.9 billion was a result of positive free cash flow of $1.3 billion, which was in turn driven by an inventory decrease of $1.8 billion and partially offset by AI infrastructure capex of $600 million in Q2. Tesla, however, highlighted that it has sufficient liquidity to fund the project roadmap, long-term capacity expansion plans, and other expenses. The company also noted that it will manage the business such that it can maintain a strong balance sheet during the uncertain period. And if you like this kind of content, please like, subscribe, and turn on notifications so you won't miss any updates. Thank you. And of course, the mainstream media is crucifying Elon Musk and Tesla even more so than they have done in the past. Whenever you open up the news on Tesla on your platform, it is crazy to see the negative Tesla story repeat itself over and over and over again. If you have been investing or trading for a long period of time, you know this is nothing to do with the company itself, but with institutions trying to get in for cheap. And while many are spooked by the news, nothing has changed about Tesla. Also, every Tesla bear is coming inside just to justify their position being interviewed by the mainstream media. Well, envy is a terrible trait to waste your time with. Anyway, Gene Munster is one of my favorite analysts, and this is what he had to say.
Well, I make that Melissa is I think that the stock has continued to slip in the after hours as soon as Elon kind of wrapped up his first 10 minutes of comments. And I think investors were hoping for him to say something more optimistic. You mentioned a couple things there, but that doesn't really change the trajectory. That still the substance of the excitement of the story is probably a year plus away. And so I think all of those are good around just check the boxes, but those boxes don't start getting checked for some time. And I think that's probably why we continue to see a little bit of slippage in the stock.
Why do you think all of a sudden investors really care about a timeline, Gene? I mean, I feel like, we've been thinking about RoboTaxi a year out, and all of a sudden a year out now is problematic.
Well, it's problematic in the context of what we saw with margins. And since those margins dipped, they did generate more cash. Cash inched up to $31 billion. So they got plenty of cash. But once you start to stress the margins a little bit, it causes investors to want to see more in terms of when this next thing is going to start to hit. And so I think that's kind of elevated some of the anxiety around timing. I'm still in the camp that they're going to deliver on these. They won't deliver it on time, but ultimately no other car company is doing what Tesla's doing, and I think this is still going to move higher.
Jane, so basically you're holding on to the stock for what's going to happen maybe 2 years down the line. I'm just wondering how you think about that in terms of holding on to something that could very well be sort of dead money when you see so many other opportunities. You think of AI as sort of a once-in-a-generation opportunity. I mean, there are other places to put that money.
Indeed, there are other places, but there is no company like Tesla that ultimately is trying to solve these complex problems. I know that other car companies are teasing around the edges, but this company is all in. Call it whatever the market cap is, sub $1 trillion today. You think about the opportunity, what they're doing around automation, around FSD fleets, even what could potentially come out from Optimus. I'm not hanging my hand on Optimus, but Melissa, I think when you think about that, that opportunity sets in front of them, and you think about that there are other companies that are $3 trillion market caps, I think Tesla can be in that league. I know today is not the day to be thinking about this with these ugly margins, but I think that the company is firmly on track with where the world is going, and I think that that's the reason to, in my opinion, that's why I'm holding my shares.
Elon said in the earnings call, if you believe that Tesla can solve the full self-driving driven features, buy Tesla shares. If you do not believe that Tesla can solve full self-driving technology, sell your shares. Do not buy Tesla. It's your decision. And it's so true. Every decision in your life is your responsibility, no one else's. Always remember to do your own research. If you have quality companies, losing simply means you sold your position at the wrong time. Now, this is just me quacking along. Don't mind me. Thank you so much for watching. My name is Claudia, and if you are interested in more Tesla stories, you can click on this video next. So I will see you next time. Goodbye.